Every year, Britain produces some of the most innovative technology companies on Earth. Companies that start in London, Cambridge, Oxford, Manchester. They attract global investors. They build world-class technology. They reach valuations worth billions. And then something strange happens. Right before these companies become truly massive, many of them quietly move to America, not later, not after failure, but right before they become billion-dollar giants. So the question is not whether Britain can build great tech companies. It clearly can. The real question is far more uncomfortable. Why does Britain keep losing them? Because once you see the pattern, you start noticing it everywhere. The pattern most people never notice. 0, 40, 210. If you follow British tech startups closely, you will eventually notice a repeating pattern. A company starts in the UK. It raises early funding locally. It hires brilliant engineers from British universities. It builds something impressive. Then suddenly a new announcement appears. The company opens a major office in Silicon Valley. Then another announcement. The company raises funding from American venture capital. Then another announcement. The company restructures. The holding company moves to the United States. And before long, something strange happens. A company that was clearly British is now described everywhere as an American tech company. But this is not a rare accident. It happens again and again and again, and when you start looking closely, you realize some of Britain's greatest technology successes followed this exact path. Famous examples: 210-4, that. Take DeepMind, one of the most important artificial intelligence companies ever created. It started in London, founded by British researchers, built with British talent. But when it became clear that DeepMind could transform artificial intelligence, it didn't become the centerpiece of a British tech empire. Instead, it was acquired by Google, an American company. Then there's ARM, the company behind the processor architecture used in most smartphones on Earth. ARM was one of Britain's greatest technology success stories, but eventually it was acquired by SoftBank and later targeted for acquisition by NVIDIA in the United States. Then there are dozens of less famous examples, British startups that begin locally but move their headquarters, funding or ownership overseas. And this raises a difficult question. If Britain can build world-class tech companies, why does it struggle to keep them? The answer begins with money. But not the kind most people think. The hidden difference in venture capital 4-6-20. In the early stages, Britain is actually quite good at funding startups. Angel investors exist. Seed funding exists. Early-stage venture capital exists. But the problem appears later, when companies need massive growth capital, because this is where the gap between Britain and America becomes enormous. In the United States, venture capital firms routinely deploy hundreds of millions of dollars into a single startup, sometimes even billions. They fund companies through aggressive global expansion. They finance huge marketing campaigns. They support massive hiring waves, and they allow companies to scale incredibly fast. In Britain, funding rounds are usually much smaller, which means British startups face a critical decision: grow slowly with limited capital, or move closer to where the world's largest investors operate. And for many founders, the choice becomes obvious. Silicon Valley gravity, 620-830. Silicon Valley does not just provide money, it provides gravity. The entire global tech ecosystem pulls toward it. The biggest venture capital funds are there. The most experienced startup advisors are there. Many of the largest technology companies are there. And that creates a powerful network effect. If you build a startup in Silicon Valley, you gain access to experienced founders, elite investors, world-class recruiters, global technology partnerships. And this ecosystem dramatically increases the probability that a company becomes a global giant. For British founders trying to scale globally, being physically inside that ecosystem can feel like a huge advantage, which means relocation is not just about prestige. It can be about survival, but money and networks are only part of the story. Because there is another force pushing British startups toward America, and it has to do with stock markets. The IPO problem, 8:30-10:50. When a tech company becomes truly successful, eventually it wants to go public. This means listing on a stock exchange. And this is where another major difference appears. The United States has the largest and most powerful technology stock markets in the world. Nasdaq and the New York Stock Exchange host many of the biggest tech companies ever created. Investors there understand technology, they understand growth, and they are comfortable valuing companies extremely highly. The London Stock Exchange historically has been different. It has been dominated by banks, energy companies, mining firms, traditional industries. Technology companies often receive lower valuations in London, which means founders and investors sometimes prefer listing in the United States instead, because a higher valuation can mean billions of dollars in additional capital, and that single financial incentive can change where a company decides to live. But this still doesn't fully explain the phenomenon. Because the biggest reason Britain loses tech giants is not money, and it's not stock markets. It's something much deeper, something structural. Talent and global scale, 1050. Building a startup is one challenge. Scaling a company into a global technology platform is another. When companies reach that stage, they need thousands of highly specialized workers, engineers, product leaders, AI researchers, global marketing teams, security experts, infrastructure architects. Silicon Valley has been building that workforce for decades. It contains one of the largest concentrations of elite technical talent on Earth. And once companies reach the scale where they need to hire aggressively, many founders believe that relocating closer to this talent pool accelerates growth. But here's the interesting twist. Britain actually produces extraordinary technical talent. Universities like Cambridge, Oxford, and Imperial College generate world-class engineers. The problem is not talent creation. The problem is talent concentration at scale, because when the largest tech ecosystems form, they become magnets. And Silicon Valley has been a magnet for half a century. Yet even this explanation misses the biggest reason of all. The real reason Britain keeps losing tech giants is something few people talk about openly. The real reason, 13-16-30, the biggest difference between the UK and the United States, is not talent, and it is not technology, it is risk tolerance. American investors historically embrace extreme risk. They fund companies that might fail spectacularly, but they do it because the few companies that succeed become enormous. Companies like Amazon, Google, Facebook, Tesla. These companies were funded through massive waves of capital long before they were profitable. In many cases, they lost money for years, but investors believed in scale, and scale requires patience. In Britain, the financial culture has historically been more conservative. Investors often prefer safer returns. They prefer businesses that reach profitability faster. This difference in mindset may seem subtle, but it dramatically affects how startups grow. Because if founders believe the biggest capital and the biggest ambition exists somewhere else, eventually they go there, and this leads to the most surprising conclusion of all. Britain may actually be one of the best places in the world to create tech companies, but not necessarily the easiest place to build global tech empires. The big reveal, 1630-1830, and here's the twist most people never realize. Britain losing startups to America does not mean Britain is failing. In fact, it might mean the opposite. Because creating companies that Silicon Valley wants to fund means Britain is producing world-class innovation. The UK has quietly become one of the strongest startup ecosystems outside the United States. London alone attracts billions in venture capital every year. British universities produce globally respected research. And British founders continue launching companies in artificial intelligence, cybersecurity, fintech, quantum computing, and deep technology. The pipeline of innovation is incredibly strong. But the global technology economy is structured in a way where the largest platforms often consolidate in the United States. Which means the real question for the future is not whether Britain can create great startups. It clearly can. The real question is this: can Britain build the environment that allows those startups to stay and scale into trillion-dollar companies? Because if that happens, the global balance of the tech industry could start to change. Binge watch trigger ending, 1830. And this leads to another fascinating question, because if Britain produces world-class startups, where exactly does the money behind them come from? Billions of pounds flow into UK technology companies every year. But much of that capital does not actually originate in Britain. Some of it comes from Silicon Valley, some of it comes from sovereign wealth funds, some of it comes from global venture capital networks few people ever see. And once you start following the money, you uncover a hidden financial system powering the entire UK tech ecosystem, which is exactly what we explore in the next video. Where does the £28 billion invested into UK tech every year actually come from? Because the answer reveals something most people never realise about how the global technology economy really works. And once you see it, you start understanding who truly controls the future of technology.